Thanks, Marty. I really appreciate it. So delighted to be here, and that last panel was really fantastic. Topics for a lot of you to think about. And so the context for this panel is when we started Change Ventures 7+ years ago. One of our goals is to get the companies that we back to be then backed by much bigger funds for growth further on, and the challenge was, how do you get those big funds to even pay attention to these tiny little countries? And back then that was a lot harder, and one of the things that's really changed in the last 2 years especially is the interest by top funds from all around the world to really spend a lot of time in the Baltics. They're understanding that this is a huge opportunity. There are amazing founders here. And so I would like to welcome on stage 3 investors who have all invested in the region. Come on. And we want to talk about why and what's different, and have a chat about this industry, this region from the perspective of investors from outside the region. So I will actually ask each of you to introduce yourselves and also mention the company that you have backed. I believe it's one each in the Baltic states, as a fund at least. So Mina, starting with you.
Hi everyone, my name is Mina Muttevchiva. I'm a partner in Nahm Capital, and we invest in B2B software companies from across Europe and Israel, and then help them become global leaders in what they're doing. And right here in Latvia, we actually found Localize about almost 2 years ago. So they were born here, Latvian founders, and now they are, I believe, 300 people in over 40 countries. So yeah, very happy investors in the region.
Fantastic.
Amazing. My name is Rytis. I am a partner with Lightspeed Venture Partners. We invest across early and late. So we're one of the larger venture firms globally. Looking for those companies that can become decacorns and beyond, to our last conversation. We as a fund had the good fortune of investing in Vinted in a couple of rounds ago. And then me personally, my portfolio is much broader than that across the Baltics. We will also soon announce another investment as a group with Estonian kind of origin startup as well. So that's going to be a second one in the portfolio, much earlier stage than Vinted. But yeah, excited to be here.
Yes.
Super, Rytis.
Hi, I'm Nahm. I'm a partner at Storm Ventures. We're a Silicon Valley VC firm that invests in B2B software. Our exposure to the Baltics has been through 2 companies. We were early investors many years ago in Pipedrive. And then recently we've been investors through Andris' introduction in Interactio in Lithuania.
Yeah, super. So thank you. So we'll start, ladies first, with the first question about what's different about this region. So why bother coming to these small countries, and sort of also on a relative basis, would love to hear sort of that why.
Yeah, why? Well, why not? Right.
But you could go everywhere, right?
You could go
so
everywhere.
you're based in London, so you have
of course.
a European mandate.
We very much actually prioritize this region for a couple of reasons. So one reason is that I think the great companies that are born here, they just know that you have to sort of build for the world from day one. The local market is relatively small. So the mentality is already, we want to take over the world, and we are building something that can be a global category leader in what we are doing, which doesn't always happen in a big market like France or Germany, where you can build a very successful and big company just serving the local market. And at least for us at Dawn, that's kind of step one. It's very, very important to find that. And the second thing, we've always thought that there is no monopoly on talent. Great ideas and great founders can come from anywhere. But I do have to say, I'm from Eastern Europe myself, being Bulgarian, and I don't know, Baltics, you can kind of classify it in many different places, but I do think that we have a bit of a chip on our shoulders somehow. We work very hard, people are very humble, and I was listening to the sort of conversation that Rytis was leading earlier, and it struck me how much people are reflecting on the hustle and the grit and how much work it actually takes to build something, versus maybe in other cultures where everything is great and everything is always glossy and beautiful. And I really think that that is what it takes to build a tremendous company. There's lots of ups and downs and lots of pitfalls and lots of near-death experiences, and just to have that grit from the beginning is quite an important ingredient as well. And finally, I will say you do have great talent here. You already, I mean, we'll talk about the ecosystem, but I think you have such great, talented people that have seen what scale looks like, what it takes, and are now doing it all over again. So it's very exciting for us.
Awesome. Being Lithuanian myself, couldn't agree more. I've been observing the evolution of the tech ecosystem, here since the beginning of time, really. And so, there are limitations. It's not a very large ecosystem. The countries, are relatively small, etc. But the benefit of that is that actually things start up much faster, and the network effects kick in way sooner. And you are, as a startup, you're capable of building the employer brand, for example, way faster. You're able to reach, if you're consumer facing, it's easier to reach consumer, through public relations and media and things like that. And so there are, and to Mina's point earlier, it's very infrequent indeed these days that startups come out in the Baltics building for the local, for the local market. And so you combine all that with also the fact that it's, English English is like the second language for pretty much everybody, and everybody kind of speaks it. It's a, pretty like young, progressive, still like grit fulfilled, if you will, kind of society. And I think also STEM education is very strong. People come out of, schools with strong mathematical, basis, and then you can build a lot of things, on top of that. So I think culturally it, took time, but now that the machine is going, it feels pretty good, and I'm very positive about, what we're going to see, to continue to come out of the Baltics in the coming years.
So what I see here in the Baltics, and what excites me is, as mentioned before, is really two things. One is the character of the founders themselves, and it's just reflected in the passion, the DNA. Maybe it's got a chip in the shoulder, or the fact that it's a smaller country, whatever, but you can see that with founders. And the second is that this is a unique opportunity in the world where great B2B companies can emerge from anywhere. It's a very unique time, and the reason why I say that is because of the cloud, Silicon Valley technology is available anywhere, and then second, in terms of go-to-market with product-led growth, you can customers don't really know where the company is if you're a product-led growth company, and so those two things are allowing great companies, great teams to just emerge and become world leaders from almost anywhere in the world. So I think, it's a combination of this unique opportunity combined with the passion of the founders. Because if you have passion but no opportunity, it's tough. You need the intersection of both.
I'll maybe just add one thing really quickly. 10, 15 years ago, there was an absence of capital. We had many of these conditions, but early stage capital was non-existent pretty much. And then that started changing slowly with the help of some of the local authorities, the European Union bodies, etc. And that kind of catalyzed the system. And now, we have funds, like Change Ventures, we have, a few others. We have angels that, come from technology ecosystems as well. And that's really what's changed the velocity of things more recently. Capital in and of itself is not sufficient, but it is necessary. It's just one of those conditions that for funds, like Storm, or Dawn, or or Lightspeed or others, when we come in, and like if no groundwork has been done, and there isn't any professionalism in the business, any kind of more accepted reporting, it can look too foreign. And when it looks too foreign, then that's the additional friction point that kind of we're now doing away with, I think, really well in this region. And so that will continue to catalyze, early stage investment ecosystem, yes, but then also Series A's, B's, and everything beyond. So that's kind of pretty exciting and a big change. And then the whole ecosystem around it. Lawyers know how to do work now with startups, and they, the other advisors, like the whole ecosystem is now kind of in a place where it can support that.
Yeah, that's kind of leading into the second thing I wanted to discuss, which is around, now, thinking about the conversations you've had with founders from this region, sort of what are the reflections and the things, the advice you would give to the founder that, maybe pitch you today, on what should they think about, what are the key things that maybe they miss or don't emphasize, or, some things, thoughts you might have as advice for any of these folks who are going to come and pitch you later?
Sure. So for the founders I've met here, one advice I have that successful repeat founders do in Silicon Valley is to think of pitching VCs as not just a one and done. So what tend to do is you have like an early meeting where you just sort of get to know the person, get to know the business, and then we'll get some updates, and then have another meeting about 6 months from now, from the first meeting. And so with that then, I as an investor can sort of see how the company has performed against the expectations. And it's much easier to draw sort of a line of where the company is going if you have 2 data points than just 1 data point. And so that way of nurturing investors works very effectively, and at the same time is very time efficient for the founder. So you can have a short introductory meeting, get to know each other, actually get free consulting, you get advice on what a person thinks that you may want to do, and then follow up, 3-6 months later.
And for those who haven't read it, Mark Suster has a great post on investing in lines, not dots. That's exactly that story. So Mina, what advice would you have to the founders you see from this region on what they can do better or differently?
I don't know, do better or differently. I guess for us, when we start a conversation, it's always things that we look at is, can they get out of their local market? Are they building that way? Do we have already data points? And then very importantly, and this becomes really important sort of maybe after Series A, is can they attract talent, global talent, right? Because you're building a global company. So of course you'll have some fantastic talent here, but if you want to start selling to the US or whatever, can you actually attract this global tier talent? And that may well turn out to be here in the Baltics, but is that level of, just top tier talent that brings your company forward? So those are 2 things that I think founders should be thinking about very early on, and kind of having that in your plans. And then the other thing, and that is a little bit cultural, is I feel like sometimes when I speak to founders here, maybe in Eastern Europe, there is a lot of focus on the today, what are we doing today, what is not working well. That is always very clear talking to founders here, so that's really awesome actually, very refreshing. But it's important for us as investors to engage also on the vision. 10 years from now, what is the huge thing that you are solving? And we're not looking for some bombastic crazy thing, but just more like, how are you thinking about building your business to be a long-term sustainable, valuable company? And that includes that vision. So those would be the things that I sometimes see maybe don't get thought about early enough here.
Rytis?
I would have said exactly those 2 things, or 3 or 4 key things. I'll just rephrase them. Really, one is learning to treat the relationship with investors as long-term relationships. Which is actually natural to people in the Baltics. We're all very relationship driven, like family plays a big role, friendships plays a big role, but I don't know that there is yet that appreciation in the entrepreneurial ecosystem deep down that a relationship with an investor is as well a very long-term relationship rather than a transactional one-off, to your earlier point. Completely agree with that. And then secondly, it's pretty often, as Mina just said, to see decks and maybe presentations by founders who are brilliant, but they would kind of have, market, which is like Gartner research and something that came out of Google, and the next slide is like KPIs and operational stuff, and like there's no opinionated view of the bigger vision and what that looks like and why the company is positioned to be a driving force of that future vision. And I don't think that that's necessarily a bad thing. It's just something that many companies in more like emerging European markets and entrepreneurs there, they need to learn to do, in addition to running brilliantly their companies, to also project the story of where it's going. And it is less natural for all sorts of cultural reasons for people in this region to be able to do that, but extremely important when talking to Western investors in particular. And so it's not one or the other, it's one and the other really, and that's kind of a little bit like where I think many folks, still can fall short, including many of the companies that I'm involved with, for example, and friends that are starting their own. That tends to be like a lot of the coaching. It's like, how do you strike that good balance between portraying the story, where you are, and why you're doing what you're doing, but then more importantly, where are you heading, and what does that future look like when you succeed? That can be a missing piece.
Yeah.
Actually, Andris, if I could just follow up on that. But say you may find this, I found this really interesting, is this MIT study on US CEOs. They were comparing Eastern Asians CEOs, in other words, Chinese, Korean, Japanese, versus South Asians, Indians and Pakistanis. And what this study found is that if you look at CEOs or people in like Stanford or Harvard Business School or execs, Southeast Asian CEOs are just skyrocketing. I mean, CEO of IBM, Alphabet, Google, Adobe. But you look at East Asians like Chinese, I'm Korean myself, that's why it hit me. Koreans and Japanese, it was like flat to down. And it was shocking looking at it. They did the analysis, and it goes back to the point that was mentioned right here, is that East Asian CEOs came across as too humble, sort of too Confucian. And so that really limited their ability to sell vision, whereas South Asians and Israelis in particular are very good at selling vision, and so as a result they tend to be the public company CEOs and the East Asians don't.
Very interesting.
So I guess a follow-on question from that for any of you who want to pick it up is sort of how does a founder balance between painting the vision but not sort of bragging and coming up with something that's seemingly impossible, right? So how's that? How do you manage that?
I would say my observation is that the cultural aversion to this is that if you think you're massively bragging and sounding super unreasonable, that's probably about the level that you need to be for Western investors to be like, oh, I think that's a reasonable. That's semi-joking here, but I do think there is this thing of like, and I think it doesn't have to be, 100%, nobody's talking here about come up with some fake thing that doesn't make sense, but just very much like all the very successful founders we're talking about just now, if you think you found a problem that is big enough, and if you can solve it, you can change the way something is done, or really change the face of an industry, or whatever it might be, or just do something like 100 times better than it's done today, that has to be, by definition, a really exciting vision and a really exciting company that you're building. And it has to, by definition, in 10, 20 years' time, have really changed something that we do today. And so I don't think it's like fake bragging, right? You, as the person with the idea and that will also help you to incentivize your team, align everyone that comes to work with you on the journey, your investors, everyone. So I think there is this perception sometimes that like, oh, it's baloney, whatever, but it's not. It's really your guiding star and the thing that keeps you going after you fall, and like all the number of times that you do fall down when you try to do something exceptional. So that's how I would reframe it in my mind, and then you would never be like off the balance, I think, because if you're really driving towards that, I don't think you can be too, you could be wrong 100%, we all are many times, but I don't think you would be fake or kind of not execute against it. But just
and the cultural differences are huge. So when I also tell founders, especially when they're going to the US, I say if you don't feel super uncomfortable when you're pitching, that you're like very aggressive, then you're barely scratching the surface, right? Yeah. Because the cultural norm is just completely in a different place.
The one watch out kind of point there is, especially if that's not a natural kind of skill, right, for the founders, and they're being coached, and I've noticed that as well. In a few instances, if they're being coached to like be more aggressive, like the promise of the vision is one thing, the promise of near-term delivery is something different. Yes. And those two things are well understood, I think, in Silicon Valley. People understand that to get to something great over a long period of time, one needs to go through trials and tribulations and kind of arrive at that, or not. But if you're kind of, to the earlier point, if you're building a relationship and you're saying, look, in 6 months' time, I'm going to have this number of customers and we're going to be in this number of markets, If it's all under your control, which it almost never is, great. But like the reality is, it's way better to pitch a big vision, and then in terms of actual execution story, kind of explain, under promise, over deliver, and then over those 2 or 3 or however many data points that you establish with the investor. Doesn't even need to be very long. 6 months is actually a great period of time. It can be even shorter sometimes. It can be a quarter. Can be even less than that. But that's kind of a bit more like the recipe for success, rather than kind of explaining yourself maybe why you're kind of at a half or a third. Reality is it's okay, like that you don't hit what you thought you might, because you may not control all the variables, and especially in early stages, there's so many things to figure out. But what's less okay is when you kind of made that promise and kind of then kind of come and explain yourself. Just like stylistically, it's like it's an important nuance to kind of balance, and can go wrong if that's not a natural skill for the founder to kind of feel out and try to balance. Yes.
So switching gears a little bit to sort of post-investment, as you think of the companies you've backed from this region, what are the 1 or 2 challenges they face as they're trying to build the businesses that are maybe harder here or different from the companies that you back in the US or elsewhere in West Europe? Maybe Tehi.
Right.
Start.
So one thing I noticed that's different is what we encourage, like in Silicon Valley, for each of the companies is to form like a CEO club. 4 other CEOs get together. Doesn't have to be all in our portfolio. We can introduce some, they can find others, but 4 to 5 CEOs that just get together and talk about their companies without any investors being present, without any board members being present, no one to judge them, basically. And it turns out to be incredibly effective sounding board for CEOs. Otherwise, being CEO is a very lonely job. And I think what's missing here is the critical mass where you can sort of naturally form these kind of groupings.
Interesting. Yeah. Rytis?
Well, the obvious point is like hiring global talent can be harder because of the location. Remote work makes it easier, but few companies have moved to fully remote, kind of mode. And so it's hybrid, it can sort of work if it's all or mostly, the team, the culture, everything else is held in a physical office. Then it is just harder to convince global talent to join. And I'm speaking primarily about more senior hires, C-level, SVP, VP level hires. That is harder. There are ways to try and circumvent that, and there's all sorts of things you may want to pitch, and it's easier to do for certain types of hires and whatnot. But by and large, it's more an issue that kind of remains more unresolved than resolved. For a lot of the companies here. And there's a few ways of going about it, but definitely one of the topics.
Mina?
Yeah, I would echo that. We do actually see, especially when our companies move over to the US, at least one of the founders tends to relocate there for that reason as well, to carry the culture. I don't know, I would say a challenge is probably, as you go, it's a bit like something that you said at the previous panel. As you go out, maybe to the valley or so on, like the pattern recognition tends to like fail a little bit for some of the VCs that you will be talking to. And so I would say it is quite helpful to have someone like Andris in your corner, or someone that can really help you position yourself, your experience. Like sometimes, you might have been extremely successful at the top Latvian company, but people wouldn't like know that. So just saying that doesn't credentialize you as much as it should, because it's not Google, and you're not like Stanford. So I would say kind of being prepared for that, not necessarily being too conscious of it, because frankly we don't care if the company is great and the numbers are great. Like we'll still be doing all we can to invest. But I just think keeping some of those things in mind can be helpful and can be a hurdle sometimes.
That is actually a bigger point in that, just super quick comment, that the typical founder in Europe, and that's what my blog post tomorrow is about actually, is like the typical founder in Europe doesn't really look like a typical founder in the US by and large. They may indeed look very, very different in terms of what the investor will recognize stylistically, how they will present, the story that they will convey. And so that in itself is a challenge. And with coaching over time, it's something that can be kind of, worked around, but definitely something just to keep in mind. It's just different.
At the same time, I wouldn't like be unauthentic, and the reason is that the U.S. has so many founders from all over the world, whether from Asia, Europe, different parts of the United States, South America, that investors, in order to compete, are rapidly changing and learning how to basically make money, and be part of great companies.
Great, thanks. So sort of starting to round off, we have three different kinds of investors here. We have an investor headquartered in Europe, based in Europe, focused on Europe. We have Rytis, who's who's in Europe, representing a U.S. investor, and Tehi, who's in the Valley, investing globally. So sort of, how would you help a founder think through the differences between these kind of options, if you can put yourself in categories, or what are your thoughts on that? And who wants to go first?
I'll go.
You go first.
I'll go first.
Go on, Europe first.
Exactly. I'm putting no. So look, I think I was thinking about that because oftentimes, and especially here, I think, and to some degree, Eastern Europe, it's like, oh, we must raise from an American VC as soon as possible, and I'm like, sure, why not? But why? Like, I'm not there thinking I must invest in UK only entrepreneurs all the time, right? I think what's important to consider is, how are these people actually going to help me? Are they going to be around when I need them? You're always a part of a portfolio, so like, what part of, I guess, capital do I represent for them? And what do I need at each stage, right? In different stages, you may need different things, like, you may need someone to really coach you to maybe pitch to that next investor, whether that's in the US or in London or wherever. And then at some point you may need, actually, all I really need is someone to introduce me to 15 CEOs in San Francisco, LA, right? So I think just really thinking about what you actually need and what the person, and really the person, to be honest, across from the table is bringing to you is very, very important. And I also think relying on your investors too much to actually do the work for you, like, we don't do that, okay? Let's just be honest. We were there to help you and make introductions and do our best to be a great strategic partner, help with the fundraising, help with like positioning the story. But I think it's very unhealthy if you think as a founder that your investors will go and like operate for you. Like, never let that happen to your company. We suck at it.
Tehi, the case for the Valley?
Yeah, I think, investors, whether they're from the Valley or Europe or locally, are all important and can help. And if I were a founder looking at investors and trying to figure out who to pick, I'd actually look at investors as more like the tail on the dog, and the head of the dog is just how you want to build a great company. And then based on that, picking different investors that will sort of help you on your journey over the next 10 years.
I think you should always raise from a US fund with a London office. The truth, though, I think, is I would pick up on Mina's point. It really depends on what the startup needs. Yes, do you care about the US? Do you care more about, first of all, building out in Europe? What are the sets of requirements? But then second and most importantly, it is really, I think, about the founder-investor fit. And by that I mean the individual partner on the investment, as opposed to even the logo that he or she carries. That relationship and that partnership will either become a key enabler, or be neutral, or be a massive negative during the journey. And it's up to the founder to kind of do the homework, do the back channel references on the individual investor, but also like try to really feel it out. Don't try to be like don't try to decide in the first or second meeting that this is the person that we're now going to get married to each other, and this is going to be now a 10-year journey and hopefully works out. Like, hope's a bad strategy, and I think there's like a real opportunity today in the market where there is quite a significant amount of capital, a lot more than there ever was, to invest in that recognition and to invest in picking the right relationship, and then hopefully reap the benefits from that decision, for many years to come. So I just kind of highlight that as probably the more important fact. But yes, you should still raise from a US fund with a London office.
I really want to just drill down on that, because I've learned that kind of myself. that in the end, all that matters is if this person calls me at 10 p.m. to tell me some bad news, which happens, and if I'm the person calling at 10 p.m. to give bad news, like, do I want to be calling Mina or do I want to be calling someone else? Like, how will they react? Because in the, in the end, it's a very difficult thing building a company, and you really want someone that you feel happy to talk to them, and you know that they'll always give you good advice, and they won't freak out, and you will figure it out.
Which is the reason I'm happy the pandemic is finishing, because then you can meet people again. Because I think building those relationships is key, and obviously it's a very long-term relationship which you need to take very seriously. So that factor probably trumps everything else in some sense. But really wonderful. Thank you very much to my esteemed panelists. A round of applause, please.
Thanks, Andris.
And thank you.